Hello everyone. This is the pre-market report video for today, 14th March 2024 for the Indian stock market in terms of Nifty and Bank Nifty. I know most of the people today who watching this video are looking for a definite answer for yesterday's fall. I don't want to disappoint you after seeing the full video, so I'm telling upfront. I tried to find it, but all I got is the possible, probable, conspiracy theory and my observation. But I think each of those is very much worth to know. Let's start. First of all, let's look at the FII trade value. Usually, their gross purchase and gross sales value will be around 15,000 crore rupees each, but yesterday it was around in the range of 35,000 crore rupees each, which is huge, almost more than double the time of average trade volume. If you see the DII, their trade value elevation or increase was more of the reaction to FII trade. And it did supported the market by buying net for over 9,000 crore rupees. Here, please ignore ITC BAT yesterday's sale, and it was not the influencer. BAT did completed the selling for 16,000 crore rupees, but as a bulk FII, it's just Singapore government, and they too bought for around just 4,000 crore rupees. So, ITC BAT yesterday's sale were not the influencer for FII trade value increase, and hence please ignore it. So, clearly from all we can say, FII was the one that caused the sell-off yesterday. In fact, DII tried to support heavily. Usually, this kind of trade volume value increase will happen during the index rebalancing, but yesterday there was no officially specified index rebalancing. Coincidentally, on last Monday, SEBI released the new guidance for index providers, which includes the framework for index rebalancing. And we know couple of weeks ago, we discussed about the FITSE's March month rebalancing, which is going to be effective from today after market hours and tomorrow, Friday, March 15th. And as per that, there is going to be a fund outflow from 3 PSU stocks, NTPC, BHEL and Power Grid. Again, coincidentally, those 3 stocks were the major draggers yesterday and all 3 down around 7%. In fact, despite low weightage in Nifty, NTPC was one of the top 5 major Nifty draggers. Here, I haven't read the full new framework and so I don't know the new change. And also, most of the fund managers did know about this FITSE fund outflow. Hence, there might be a chance they shorted those stocks. Or maybe FITSE might started the index rebalancing progressively for 2-3 days starting from yesterday. That's the first theory. Second, yesterday at the same time as our market sell-off starting, Bloomberg released the article that Indian foreign parent companies such as Whirlpool, Singtel and BAT and the global foreign funds since January have been withdrawing the money from Indian equity due to its high valuation. Third, very important, last Monday, SEBI asked the Indian Mutual Fund to give their stress test report on small and mid-cap stocks by this Friday, March 15th. So, possibly FII might exit their position before the stress test results. Fourth, SBI submitted the electoral bonds transaction details to Election Commission since its inception. Again, those details will be available for public from tomorrow onwards. And on the top line, 55% of the total fund did went into the ruling party and possibly some of the listed companies might involved in those transactions like Adani Group and Reliance, which potentially might created the sell-off. Finally, yesterday we did discuss this IIP data. India's industrial production for January month comes as very low, just 3.8%, and the main slowdown comes from manufacturing, electricity generation and mining activity. Again, those sectors were also the major draggers. So that's it. These were the 5 possible reasons for the yesterday's sell-off. Either individually or everything might combine together with the options trading run for cover. All snowballed it together might created this massive sell-off. Those were the important takeaways from yesterday's market. Then coming to US, there was no major event last night. Market at present kind of waiting for the retail sales data which is due tonight. Hence, both Dow Jones and S&P 500 closed around flat, whereas Nasdaq was down, mainly dragged by Tesla and semiconductor stocks. Wells Fargo downgraded the Tesla stock to sell rating, stating Tesla a growth company with no growth, which made the stock price to crash 4%. Similarly, US government scrapped the plan to give $2.5 billion to Intel for new Gen chip manufacturing, which in turn affected all the semiconductor stocks. In the end, Dow Jones increased marginally 0.1%, S&P 500 down marginally 0.19%, whereas Nasdaq decreased 0.54%. In case of VIX, it's around the same place as Tuesday night closing, 13.75. About oil, there was an escalation and supply disruption in Russian refineries. If required, please pause and read the reason, which in turn made the oil price to increase 3%. At the time of this video, WTI crude trading around $80 per barrel and Brent crude trading around $84 per barrel. Regarding Indian ADR, only Wipro closed over 2% negative, all other three down but less than 0.5%. And GIFT Nifty is no difference. Early morning today at 3 a.m. Indian Standard Time, it closed at 22,057. Equating it with the spot market, it's indicating flat to 30 points negative opening. As a summary, US market closed mixed with a negative bias. In line with that, both GIFT Nifty and Indian ADR also indicating the mild negative bias. However, this Russian refineries disruption problem is a huge concern for Reliance Industries. Yesterday in Indian market, Reliance was down by around 2%, but yesterday in GDR, it was down near 4%, which was almost double in the downside, and thus it's a bit of concern if it transferred to our Indian market today means. Moving on, yesterday as per stock open interest, there were more than 100 stocks that got an increase in open interest along with a negative close, indicates the short build-up. So it's not possible to tell all, but I will tell the important ones. Reliance, Power Grid, Adani Port, Adani Enterprise, MCX, HAL and Bata India. On the other hand, only two stocks in the long build-up, ITC and Cipla, are the stocks that got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, around 12 p.m. India's wholesale inflation data is due. Other than that, in the aftermarket hours, around 6 p.m. for US, weekly jobs data and February month retail sales data are some of the important items we need to keep an eye out today. Coming to technical, after opening 100 points gap up, Nifty was under pressure throughout the day and extended its downward journey. So finally closed below the psychological 22,000 mark. It was the biggest single day fall in the last 7 weeks, and thus on the daily chart it formed the obvious large bearish candlestick pattern. Here, technically implying two things. One, Nifty had a breakdown from the rising channel, signaling the conclusion of the previous uptrend and the potential beginning of a downtrend. Second, Nifty had descended below the recent consolidation phase, further emphasizing the increasing weakness. In addition, Relative Strength Index RSI is also showing a bearish crossover as it dropped below 50. Hence, for the short term, we can expect more selling pressure with resistance around 22,250. Then on the downside, the support levels are between 21,800 and 21,700. Then in case of Bank Nifty, it managed a bit better as its fall percentage was less than half of Nifty. However, it closed below 47,000. Thus, on the daily chart, it formed a bearish candlestick pattern with continuation of lower high lower low formation for the third consecutive session, but defended 21-day exponential moving average 46,949. If Bank Nifty failed to defend the same today means, then possibly we can expect the more selling pressure, which potentially could drive the Bank Nifty lower towards 46,000, 45,000 mark. On the upside, 47,500 mark is a strong resistance zone. Until this resistance overcome on a closing basis, Bank Nifty will continue to be in a consolidation mode. Regarding weekly options front, the maximum call option open interest was at 22,500 strike, followed by 22,400 and 22,300 strike, with meaningful new call option writing at 22,300 strike, then 22,400 and 22,200 strike. Whereas on the put side, the maximum open interest was at 21,700 strike, followed by 21,500 and 21,800 strike, with new put option writing at 21,700 strike, then 21,500 and 21,600 strike. Thus, from the options data, 21,800 to 21,700 is expected to be the next support, and the resistance to be around 22,200 to 22,300 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.